August 1st, 2019, Warsaw Stock Exchange announced its earnings call for second quarter, and we spoke about that with the Stocks Exchange chairman.
We positively surprised our analysts, so we are glad with the results, especially in the commodity market where we were growing double digit. Nobody expected that. We face challenging market environment in the financial markets, especially in equity cash trading and derivatives. We are still performing best in Europe, but still we have negative growth in our equity. When it comes to profitability, we have historically one of the highest EBITDA margin and net profit margins due to our very restrictive cost control. So we are basically happy with quarter two and the first half of this year.
How do you identify your growth areas for the Warsaw Stock Exchange?
Quarter two was quite important for our strategy, for our strategic initiatives. We initiated the GPW Growth Program. It's an educational program targeted for medium-sized enterprises, where we give a full-blown training on different managerial aspects, but of course with some focus on capital raising. So we hope that we will build up a IPO pipeline based on the alumni of this training program. It's done with various of partners, including ministries and other institutions, but also with the private sector. And the complete game changer is opening of our R&D center in Łódź, about 150 kilometers from Warsaw, where we will work on a new generation trading engine. It will be first time when a medium-sized exchange store builds up a trading system which is especially targeted for smaller exchanges, especially in the Central Eastern European region, but also in East Europe, Caucasian region and Middle East. And what we believe we will have kind of technological leapfrogging. So we will jump to newest technology. The system will be modular, very light, and in this aspect very competitive versus large systems developed and implemented by large exchanges. And pretty soon we hope we will be exporting those technologies worldwide.
Would you like to use the commercially available solution in that area?
No, we will build it from the scratch. We will not use any third-party licenses or something like this. We will build it on our own code or open source codes. The only portion of code we're gonna use are interfaces, as we want to keep the standardized interface as we have it now for as long as possible. So there will be plenty of time for our members, for our clients to adjust to the new system, and also would like to profit from the community which is around this standard fixed protocol. But we also, for the high frequency traders, will also develop a binary interface to make the latency and latency low and high frequency trading possible.
How do you see what is the preferred vision of the development of the Warsaw Stock Exchange in the next, say, 5 years from now?
Well, year ago we outlined 20 plus strategic initiatives, and one by one we implement them. The building blocks of the strategy is diversification. We would like to have a more business line, including agriculture market and completely new design of our bonds market, etc. We also want to deepen our value chain in our core markets, especially by introducing new indexes, new derivatives, new products for our clients, more customized to different customer groups. And the third pillar is looking for more stable sources of revenues, being data. One initiative is fully devoted to data and technology. So currently we are too much exposed to the market conditions, and we would like to balance our relatively high fixed cost with the recurring revenue streams. This is of course a process we cannot change for purely a trading venue to revenue-driven, recurring revenue-driven company, but the first effects of the strategy are still visible. In terms of data, we are growing 7.5% year on year, so it shows that this recurring revenues are increasing, and hopefully we will balance and those recurring revenues and our fixed costs, so we will decrease our operational leverage.
Poland decided to build or establish its own Polish rating agency. So what is happening with this project?
Rating agency is a JV, joint venture, including Polish Development Fund. It's a kind of sovereign fund. BIG, it's a banking credit scoring agency, which is owned by the Polish banks, both private and state control. And Warsaw Stock Exchange, we submitted a request to ESMA for a registration. Few days ago, ESMA decided not to give the registration. The reason for that was not the full implementation of their concerns regarding independence of the agency, which we received by the end of April. It was related to our corporate governance, so the structure of decision-making process, and we are fully committed to implement all the recommended actions by ESMA, and we hope that we'll be registered soon after we have all the procedures and different style of corporate governments in place.
With the current rating of Polish economy, is a legitimate question: why do we need a local rating agency if the ratings are excellent anyway?
Yeah, Poland is a country with excellent rating. Our blue chip companies have very good ratings from top 3 rating agencies. The issue is with the small and medium-sized companies. They cannot afford to be rated by the top agencies. So we aim for this market, and this complementary initiative to our bond market, what I mentioned also previously, that to make a vivid bonds market, we have to classification of the risk profile of the companies, especially those smaller ones. So there will be relatively lower rating for those who are have the higher probability of default, and those will have to compensate this risk to the investors with the higher coupon, and those with high credit worthiness, so low probability of default, will benefit with the lower cost of capital, so lower coupon, and this will give a portfolio investor, institutional investors, an overview of the risk classes, and without that we cannot build up our DCM, debt capital market.
Thank you very much.
Thank you.
And that was it for tonight's Poland Daily Business.